Hello everybody. I wanted to go over this Yoga Limited. They only asked for year 3, but let's just review, because the key to all of these net present value problems and the fact that IRR and also payback is being able to map out the cash flows by year. So here we have the original cost of the item, the salvage value of the new. Now the cost of the item, that's outflow, so that's negative. The selling off the old thing is an inflow and happens on the day one when you buy the new one. And then working capital comes out. It restricts cash immediately, and then it releases it back at the end of the life of the project. So it's minus in year 0 and plus at the end, which this is a 5-year life. So, and then it tells you that it's going to generate new tuition. So those are new cash receipts for 5 years, $116,000. And then the license must be renewed in year 3. So that's going to be an outflow. You got to pay for the license. And then the $382,000 streaming system will be sold for $22,000 at the end of its life. So that's an incoming in year 5. So what we do now is figure out the net cash flow for each of the years. So we just add those up. And since the cash flow is not the same in any year, we're not going to do it using the present value of annuity. We're going to discount each year back. So the present value for year 0, there is no discounting. It's already in the present. But for the other ones, we're going to calculate the present value. And so we can use Excel for that. And the rate that told us to use was 10%. And the number of periods you could put in the year, I'm going to go ahead and point to it so I can copy it down. And then the future value is a minus. That's how we tell Excel that it's in the future. And then we want it at the end of the period, so we'll leave that blank. There is no payment. We're just doing the cash flow 1 year at a time. I would just do a sanity check. This has to be smaller than cash flow or else something's wrong. So they didn't ask for net present value, but if they had, we would be giving it the $69,944. But in this particular one, they were asking for this line. So they were asking for the $83.91.